Hi, this is Randy Finney with the right side of the chart, and today is Friday, March 10th, 2017, and this video is a follow-up to Wednesday's video. On Wednesday morning, I had published a video titled something to the effect of earnings trade setups and strategies, and the point of that video was twofold. Number one, I wanted to share, it's been my experience as a trader that holding a stock or trading a stock into earnings is I've always heard for years, just about across the board, that holding into earnings is a crapshoot. And a lot of traders, as a rule, will close out their positions ahead of time because they believe it's completely random. A stock can gap either for or against their position if there's a surprise with the earnings. Stocks don't always have to react to earnings. Some companies, as I mentioned, do a very good job of managing earnings expectations. Therefore, there aren't that many surprises. And then others, as I mentioned, I use this example, Ciena. I showed you all these gaps back here in the past that are most likely earnings gaps. They're huge. So, every stock you have to take that into account when trading. What is their history after earnings? Are they prone to large gaps in either direction? And if so, if that's not your cup of tea, then avoid it. But the point of the video was mainly twofold. I wanted to share some trade setups that stood out to me at this time. Also, the fact that they were all scheduled to report earnings that day. I did the video on Wednesday, started it in pre-market, and all the stocks that I went over, I had combed through dozens and dozens and dozens of names, maybe 100 or more stocks that were scheduled to report, and picked out the 20 or so that looked either clearly bullish or clearly bearish to me. And so other than sharing those trade ideas, and it's nice to know if any of these did break out, which they have, triggered entries, that your now earnings are out of the way. In other words, you have up to 3 months for a swing trade now to not have to worry about earnings. And then the other part, again, was to illustrate the point that, it's been my experience more often than not. Of course, that's not always, but much more often than not, if a chart has a clearly bullish or bearish technical pattern, and that is the key word, clearly bullish or bearish, because if the charts are ambiguous, or maybe it's a potential bullish or bearish pattern forming, but it's not yet ripe. And there were a few that I went over there, for example, and I'll talk on those as I go through this video, where I said, okay, this pattern could be a potentially bearish pattern, but there's still work to be done. It doesn't look like it's ready to break out or break down. And just so you know, here's what I did. I tallied up those. It's now Friday, so we had either all day Thursday, all day Wednesday for the stocks that reported Wednesday morning, and all day yesterday to trade. And for those that reported Wednesday after the bell, which were quite a few of the names on there, they've had at least one full trading day. And as I said in the video, sometimes the initial reaction isn't always the one that sticks. It's the subsequent price action over the next few days. So let's go over that. And I can tell you right now, here's the numbers. Out of the 20 stocks I covered, I was correct on 10, meaning if I said the stock was clearly bullish or bearish and I expected it to move up following earnings on a bullish trade setup, then that's correct. And if it was a bearish pattern, I expect the stock to go down, that's correct. So on half of those, I was correct. However, I was only wrong on 2, meaning if I expected it to move down, it went up, and if I expected it to move up, it went down. And that leaves 8, which I have a question mark by. Now the question mark, and I'll go through this video and explain that, it just means the stock has pretty much gone nowhere. It's trading about where it was, or in the few examples where I said, and I'll go over those stocks, here's one that this is a potential bullish or bearish pattern, but there's work to do because the stock is still within the pattern. In other words, with Ciena, for example, this stock was right at the point where a bearish rising wedge usually breaks down. It's not an exact level. It's roughly 65 to 80% towards the apex of the wedge, somewhere in there. You can look at a rising wedge pattern. They usually don't break down over here, and they usually don't break down right at the apex. This is the sweet spot. And so, as you all know, I followed up. By the time I published that video, Ciena had the market open, Ciena had gapped down, and just beautiful technical analysis right under the 2514 level. You could see this was a target I had added during the video, and I'll show you that right now. Here's a screenshot from the video. Let's see, I'll have to cue that up. Oh, you know what? I have that on another window. There's the post on the site. There it is. This is on the YouTube page. So there's Ciena. There's the target I listed ahead of time. I mentioned the rising wedge, but you had a support level just below. We needed to see taken out to give you an all clear sell signal. And again, this is just in my opinion, a beautiful example of technical analysis. It gapped below that level, 25.14, back tested it from above, tagged it, and turned back, because once support is broken, it becomes resistance. That very day, almost to the penny, within 2 cents, literally on a $23.50 stock, it came within that target, bounced from there, tested it again, and you see this is how technical analysis works. This is support, and your next sell signal is a break of that level. So Ciena is going to do one of two things. It's either going to defend that support level. We've had a few intraday breaks, but when trading on a daily time frame, all that matters are your daily candlestick closes. And so a close below 23.55 or an impulsive intraday break, not a little limp down through and move back up, but a big red candle takes us down to this next target here at 22.75, which I do believe will be hit over time. So there's one trade idea, pretty profitable if you took it, and you still had time even after the open, because it didn't shoot all the way down here. I think it opened up somewhere there. So there's one that played out. Next one up was CMTL. Okay, let's just pause the video for a second and I'll show you the screenshot. Okay, this was CMTL, and I'm assuming that one reported after the bell. I didn't check that, but here it was. I mentioned a bullish chart pattern, bullish divergence, everything else. Again, watch that video. I don't want to spend too much time going over what I covered, but here, clearly bullish chart pattern. I said we needed to take out that level. I mentioned this as being an important level here, resistance level, and if that gets taken out, which it now has, let's look at the chart. I said we'd likely run up to this area, have a little reaction, and then ultimately backfill, well, that would be the gap backfill at that point, but then move up here. So let's see what's happened. That stock was at 11.04 when I did the video, so I'm going to just grab that level down here, 11.04, if I can grab it close enough. There's 11.05. Here's a stock that's gained 31%. Okay, and I was, again, a clearly bullish chart pattern, in my opinion, gapped above both the downtrend line as well as this horizontal resistance line I had. You can see the reaction if you zoom in yesterday. We overshot that first resistance level I had, closed back down right on it, and now opened above it. That opens the door for a move up. So there's a 30% gainer on a stock that I, predicted to have a bullish outcome. And again, you can say that it's random, but the facts are pretty clear. There's the vast majority of stocks played out the way as expected. And next one up, CSTM. Keep in mind, guys, I'm doing this also because there's still a lot of these trades still offer objective entry. CSTM, I won't have to jump back and forth to the video. It'll take forever, but you know what's happened. Again, that was just 3 days ago. So this one was in a bearish rising wedge, fully mature. Let's see. You can see the point of the wedge, and you can see there's the earnings gap. It gapped down. Must have reported after the bell, gap down below the wedge, and so far that one's good for a drop of about 17%. So you can see not only are the ones that I predicted, the 10 that did play out the way they were predicted, they played out for huge gains, a lot of these so far. Next one up that I covered was WATT. Did I do, that was CSTM? Hold on, guys. Have two symbols that look, okay, yeah, CSTM I did, and now WATT. This one I mentioned, this is one of the question marks because I said it's a potential double top pattern. You have a series, there are really three in close proximity, 3 tags there, another tag there, and there's no way on a double top pattern in time, like a wedge, to predict when it'll break down. Plus, we weren't tapping right on the bottom. And on that, add to that, it's gone nowhere. So I said, this one's a potential short if it breaks down the bottom of this double top range, this trading range here. But again, we're well within the range, and there's really no way to tell. And that one hasn't gone up or down. So had you even shorted it in the expectation of a gap down below, you wouldn't have made money, but you wouldn't have lost money because we're right about where we were when I covered it in the video. So that's one of the 8 question marks, or neutral push, you want to call it. ERII, this one I said as a a bullish falling wedge pattern, and it's pretty much done nothing. We're still, it's right about where it was the other day. We're right around the bottom of the bearish rise, bullish falling wedge pattern, and I still expect an upside, and it's still holding that support level here. So this one again is about where it was. So there's another one that's a question mark, neither a winner nor a loser. It just didn't react to earnings. EVOK, I mentioned this is a potentially bearish. It might have more room to work its way up within this wedge, but I did mention as a bearish, and it's slightly above the wedge now, and it has moved down below earnings. So, I put a question mark by that one. That counts as one of the 8, even though it is profitable. Had you shorted it there, it was just too early within the wedge for me to personally short. But you can see the negative divergence, and it has moved down. So technically, that is a winner. Would really put us, 11 in the winning category and only 2 in the losing category. EXPR, that's Express. This one did gap down. I mentioned that I could see a little more downside and possible expansion of this wedge here, and so far it's actually up. When I did the video, it was already down here at the bottom. We're trading at the wedge. It's actually gained since then. Technically that one is up now, and that's a winner. If you would have bought, on the gap down, I think that one reported that morning. It must have, because there's Wednesday's candlesticks. So the big gap down to the bottom of the wedge, and it has so far recovered and moved up. And my expectation is for a continued move up. Could put in certainly has the potential for another divergent low over here, and ultimately, you need to see a break above this bullish falling wedge for a longer term, for a buy signal period. But that one's moved up a little bit, and as expected from where it was covered in the video. EXTN, that was covered up here. Let's take a look at the video. Okay, here's a screenshot from the video. It was at 29.45. I mentioned this is a clearly bearish pattern. It had already broken down the divergent high that I pointed out. I had drawn another line right there showing that we had a divergent, this was a divergent high right here. We had a breakdown and a back test is what I pointed out. Successful back test, meaning prices rolled over after back testing. I mentioned this as a key support level, 29.45, and stock is already one that has broken down and started to play out as a short, and sure enough, that continued. Stock, after reporting earnings, if I can grab that level, it's dropped as much as about 10% from where it was highlighted as a clearly bearish. So there's another one that's played out. So you see the common theme here. More often than not, when these charts are clearly bearish or bullish, especially when they're ready to pop, so to speak, or have already broken, then that's where more than likely that's the way the gap is going to play out. FLKS, this was one of the 2 ones that I was wrong on. This was a bullish falling wedge pattern. It had broken out. I had mentioned it broke out in advance of earnings, and that breakout had failed or was faded. And after earnings, this one snapped back down within the wedge. So this was somebody jumped the gun, whether it was news induced or not, but there's still a bullish falling wedge to look at. If you exclude that 2-day brief, very fleeting rally that was faded quickly, one to keep an eye on, because you still have potential divergence. That's the most important thing. It may want to make another low, so it's still bullish, but that was I put an X there. I was said that was expected to maybe back test and move higher, and since it fell back in the wedge and it's below where it was, that was one of the 2 out of 20 that was wrong. And GTT, clearly bearish. Okay, here's the chart of GTT that I showed in the video. This is a screenshot. It was at 26.90, right on a pretty well-defined uptrend line, following a clearly bearish divergent high. So my expectation was for a downside gap there. Oops, wrong page. And from that point, just the other day, it played out as expected, and it's so far fallen 11%. So again, not only were the majority of these expected, it's not witchcraft. This isn't looking at a crystal ball. It's using technical analysis to guesstimate which way a stock will react to earnings, favorably or negatively. And not only did a lot of these played out, they played out for, in many cases, you've seen so far, double-digit gains so far. There's a target right there, the next target, and that would probably be my final target right here. There's a nice gap there. And that's at, for those of you that took this one, 2266, maybe cover a little bit above that. If it may want to backfill the gap. If it does that, you can see the bottom of the gap right there. All right, let's move on to the next one. The next one would be on my list, HYGS. And this is one had to have a question mark by because I said it had a lot of work to do. You know, it was bullish back here, and there is large divergence, and I expect over time, but I had mentioned that it has more work to do within this pattern. It was pretty overbought to get here. It pulled back, and we're not pushing right against that line. There's plenty of room for this one to work. So I listed as a setup. It needs to take out your buy signal would be a break above this line, and I am still bullish on it. It's gone virtually nowhere. We can look at where it was. In fact, let me do that for you right. Okay, there it was in the video at 590. So again, today we're at 610. You know, it's a gain. It's not bad. You know, from 590 to 610. I grabbed on this 587. It's hard to get 590 exactly up to where did I say 610? I'll go to 609. That's about almost a 4% gain. So technically correct, but I'm not. I just put a question mark by that one because, again, I said it's just not close enough to a clear breakout level. It needs to take that level out and then take this level out, and then it can run. So either way, I just counted that as a push, even though it is slightly positive, and it was a bullish chart. All right, next up, we're almost done. KEYW. KEYW, key holdings. Let's take a look at the video screenshot. Okay, video screenshot here. This was, again, a clearly bearish chart, a bearish rising wedge, which recently broke down, back-tested, gap down to a key support level at 970. Mentioned that I expected more downside, and the next sell signal would be a break of that 970 level. Let's see what's happened since the video. Sure enough, the charts played out. Again, the technicals played out. They predicted which way earnings would go, and this one broke down. And from that level, in just a couple days, it went down as much as, if I take the move to the bottom there, about a 10% drop. So here's another double-digit gainer in just a couple days. So you could almost, again, it is certainly an aggressive strategy, but you could almost, you know, sit here and take a look and go through all the, it's a lot of work, and it took me a lot of time to prep this video and find these charts to begin with and to prep Wednesday's video. But go through and look at clearly bullish or bearish chart patterns, and, you know, trade, especially if you're good with options. You can limit your risk using option strategies. Now, those are pretty complex, but that's one way to do it. Or you can go long or short these stocks. But the key is you have to do enough of them. You can't just pick one, because if that one happens to be the one that gaps way against your position, you're going to get burned. It's like anything, just like investing. Don't put all your eggs in one basket. Spread it out. That's diversity, and it'll mitigate risks. Okay, this next one up, LHCG. This was the second. If I might have spoken correctly before. FLKS being the first one that was certainly wrong, and not by too much. And this one as well. It was at 48.50, right on the trend line. Recently had a divergent high. This is still a level that I believe will break, and this is still a bearish chart pattern. But so far, this one actually held support. You can see here, a fast forward. It had an a brief intraday breakthrough, but it managed to close the day back above the trend line and has since gone higher. So that one I count as wrong. So you would have, had you shorted it in anticipation of a breakdown, you'd be underwater now by about 6.5%, almost 7% there. But again, just a trend line to watch. You can set an alert. You can also move that trend line down. I'm not crazy about this one because you can draw that alternative trend line like that if you capture these three intraday pierces, especially since that one happened yesterday. That changes things. Now I have three reactions to go by. Before I only had two, and that's why I had the trend line drawn like that. So again, not one of my favorite, but I counted that against me as 2 out of 20 that were wrong. Next one up, that was LHCG. MGPI would be next. or was next in the video. And this one, I said, I have a note here, listen to notes. Let me check that on the video real. Okay, this was the video for MGPI, and it said the stock had already opened. And let me pause that video there. Hold on one second. So the stock had already opened, and I said was moving up, and therefore I said I would not have shorted that because it's still above the trend line. But this is a clearly bearish pattern, and I showed a one possible scenario of another new high within this wedge. That would bring us closer to really the point where that wedge might break down. So I certainly put a question mark by there. Once again, the bell had already rang. The market was trading. This one had already gapped up. And it's one to watch. So more of a setup that's in development versus one ready to pop. And you can see it if I look at it today. It hasn't gone up much more from there, but again, I wouldn't do anything. And I clearly said that in the video. I said I would not short that one until and unless this trend line goes. So just one to watch for the future. Okay, this is OMED. This is the video screenshot from Wednesday. As I stated, bullish. This was a clean, nice, clean, big bearish rising wedge breakout, back test, and was scheduled to report. And since then, it's moved higher. In fact, from that point, if I can just go down to where it was back testing that day, right about. I can't hit the candle because I'll grab the trend line, so I'm going parallel to it, to the right of it. And that one had gained so far about 16% following earnings. So it had a positive reaction to earnings, made that a successful back test so far. And there's your targets on that one. That would be your first target up here. So it's still, if that one plays out, that's another 20% from where it is now. And it's still, again, positive. So that was certainly played out in the direction I thought it would. SMTC. Semtech. This one's a wash. Yeah, I have a question mark by that. We were right around there yesterday. It had a lot of volatility, big move right up to the top of the channel. Let's look at the video real quick. Okay, here's the video screenshot. And again, the sell signal will come here. This one had a big pop, and just like TA 101, it just hit the top of that pretty well-defined price channel. Here it's a price channel. In fact, it goes all the way back. There's some reactions all the way back here, and we look at the chart. So we ran up, hit it, reversed, and we're right back to where we started. So that's a wash. That it hasn't played out. You'd be exactly where you started again had you shorted. And I'm not condoning a strategy really of shorting in front of earnings. Just more so again to be on the lookout. If you're in these already, if you're in a position that's 3-4 weeks or a couple months into it, and you're profitable on the position, you're comfortable with it. The charts can just give you an indication of which way that gap is likely to go. So this one has yet to trigger a sell signal, and it's right about where it was. But you can see the clear divergent high. In fact, the other day it put in another divergent high when it popped and hit the top of that channel. So if I don't have it already, I already do. I have a trend line alert set for that one, so I may short that one on a break there. All right, 4 more to go. TECD. This one, I put a question mark. Let's see why. There's a video. It was at 89.35, and today it's up a little bit higher than that. It's at the top of the wedge. Okay, so it hasn't broken down. Maybe that should count against me there. Because it is now trading higher. It was at 89.35 before, and it's moved up, but it's not by a whole lot. It relative to the scope of this pattern, of course, maybe about a 5% move, and it's right now at the top of the wedge. So you could short it here. That might be resistance. I give more significance to the uptrend lines than I do these upper lines. They just help to highlight the divergences, although sometimes, very often, you get reactions off there. So that one I had a question mark by. You might want to chalk that up to the losing camp, only because it is up quite a bit more. So then maybe that's 10 winners against 3 losers if we count that one, because it is upside down. And that is at the area where a wedge should or could and will break down any minute or any day now. That's TECD. And then TTPH. That's obviously bullish. I pointed that one out right here. Flirting the other day, you can see just a few days ago, it has been flirting with this trend line. I mentioned this whole basing pattern. This is a throughout 2016, the entire year, this one's been basing in this range. Now, thanks to earnings, it has broken out, and that leaves pretty much clear skies for a move all the way up here over time. This is a drug manufacturer, so from where it was, if it gets to that target that I have up there, that's a 100% return. You double your money if it gets there in time. So either way, you're profitable now, so that's definitely a check mark as to one which went in the direction that I predicted it would. UNFI has gone nowhere. That's a question mark because it's exactly where it was, where it's pinched. We had a breakdown. Overall, I think it's bearish because we broke this primary uptrend line. However, we've hit support well defined. You can see numerous. There's a gap back here, reaction, a gap, and a reaction. Couple reactions there, reactions here. So you're pinched between a rock and a hard place. You have this downtrend line, which is resistance. You have support below. So my best guess is, although you'd want to cover if you were short on a break here, and there's no need to short right above support, but you want to see a break, a solid break of the 4250-ish level, and then that will bring us down here to about 38.75. Be good for a drop of roughly 9% or so. So there again, that's a wash on that one. It hasn't gone anywhere, so that's a question mark. And the last one is XENE. XENON Pharmaceuticals hasn't gone anywhere. That's another wash. It's just waiting. You can see it's basing here, pushing up against this resistance level for months now. And so what you need to see is an impulsive breakout, and not just a little intraday whimper through there, but an impulsive break either on very high volume, especially a daily close. Maybe you get that. Maybe a back test, move this back up, but just one to watch. All right, guys, so hopefully this has been useful. There's both potential trade setups. Maybe some of you already took some of these trades. There's still some that haven't popped yet, some that just recently triggered a breakdown or a breakout on the bullish side and have more room to run. And if nothing else, maybe you now have a little bit less guesswork or frustration in deciding whether to hold a position that you have into earnings or not. And as always, if you're a member of the site, that's what I'm here for. If you have a position and you want a second opinion on it, just drop me a line within the trading room. All right, this has been Randy Finney with Right Side of the Chart. Hope you found it useful.